Hello, welcome to Simple Chart Analysis. I'm excited to bring you this video which discusses about many of the issues that most of the traders face during their trading journey. And most of these mistakes, or you can call errors, could be fatal. And hence, after many months of research and development, I've come up with these ultimate trading strategies that you can implement in your trading. I'm going to cover extensively about ultimate trading strategies so that you can make an informed decision whether these strategies are for you or not. The ultimate trading strategies that I'm going to explain to you integrates both price action analysis and indicator analysis as well. It's like taking the best of both the worlds. And hence, these strategies have a high probability of making you profitable. As you all know, market is always uncertain, and the best way to deal with uncertainty is by using probability as a tool. And hence, these strategies use the probability to give us an edge in trading so that we can have a proper statistical advantage when we invest our money in trading. This video will cover the following topics: the common problems or mistakes made by traders, and then we move on to the main section, which is the ultimate trading strategies that has been backtested for 5 years. Then we move on to the section of comparing these ultimate trading strategies. Totally I have got 12 strategies for you, from which you can pick all of them or any of them or even none of them based on your likings. And finally, I am going to explain to you how you can make it yours and make your trading journey a profitable one. Remember, these strategies are going to make your time and money work for you. Now, moving on to the first section, the common problems or mistakes of traders. You might have already experienced or heard the experiences from others about emotions involved in trading. You know what? Emotions is a wrong tool to use it for trading. What do I mean by that? Let me explain. If you are influenced by emotions, or emotions is part of your trading equation, then there is a high probability that the past trades are going to influence your current and future trades. And because the market is uncertain, and the market is different since you took the past trade, using emotions as a tool knowingly or unknowingly is detrimental to your goal of becoming a profitable trader. The other common problem or mistake is normally most of the traders find it difficult to maintain discipline in trading. They have made some sort of a plan, even though maybe it's not a robust plan. They have some sort of a plan in their mind or on paper, but they fail to execute those plans, or they fail to stick to those plans and make last minute changes as they could be driven by their emotions. And if emotions are part of your trading style, then the market ensures that emotions come into play in a big way, not to make you profitable, but to take you into losses. The other main problem is that usually traders do not have a clear strategy as to how they should proceed with the trades and be consistent with that. No matter what kind of trader you are, whether you are a price action trader where the analysis is very subjective, or an indicator based trader, if you fail to stick to the plan, then every strategy is bound to fail. The other major thing that traders face is lack of robust risk management. Risk management is kind of boring for every trader, but it is the most important thing. If you are taking risks beyond your threshold or limits, it could be fatal and you could lose the capital. If you don't have a proper risk management, then it is highly difficult to set the frequency for your trading, because you really don't know when to stop taking trades or continue. And this most of the times leads to over trading. The other major problem the traders face is a lack of research and knowledge. Most of the people think that stock market is easy, and they think it is easy because they see from the prism of gambling. if you don't acquire the necessary knowledge and do some research before investing your money, it could again wipe out your capital. Some people find it difficult to understand the price action analysis, so they overly depend on the indicators. They think they can blame the indicators if they did make losses and search for another indicator. This reminds me of a famous quote by Chuck Hayes, who said, "It was really later on when I decided that the reason there are so many technical indicators out there is because none of them work well." It's not about the ego here. It's about being profitable or not. So, keeping all these in mind, I have built this ultimate trading strategies that adequately addresses and, most importantly, rectifies the problems and mistakes that we just discussed. And we will come back to this slide again after explaining you all the details about the ultimate trading strategies, and we will see whether all these issues have been satisfactorily eliminated. Now, without any further ado, let's move on to our ultimate trading strategies section. The first strategy is Bank Nifty on a 90-minute time frame. This is how it looks on the chart when this indicator is added in TradingView. This strategy doesn't take much risk and exits if price changes its behavior, but keeps you in the trade until that happens. This strategy aligns itself strongly with the famous quote, "Cut your losses early and let your profits run." I don't want to load you with too many data points. I will highlight some of the most significant parameters that impacts the outcome of the strategy. The first one is the equity curve. The next parameter is the profit factor. And finally, the total number of trades, so that you know the frequency of the trades you might be entering in. Don't just focus on the returns yet. We will look into it in more detail when comparing with other strategies. So if you look at the bottom screen now, you can see the details about this strategy. The first parameter is the equity curve, which you are seeing here, which is pretty smooth curve going upwards. You can easily say it's making higher highs and higher lows, which means it's in an uptrend. That is what we all want to see in an equity curve. Then we look at the profit factor. Here it is 2.09. Let me tell you what profit factor is. Suppose you took 10 trades and you made a loss of, let's say, 50,000, and you made a profit of 1 lakh. Then it would have a profit factor of 2. So the overall profits you made by the overall losses you made gives you the profit factor. So to say we have a healthy profit factor, it should be at least more than 1.75 for you to make decent returns. Okay, so this strategy has a very healthy profit factor here. And don't be tempted to look at the returns yet. We will discuss more about this later. And you can see from the equity curve, there are no major drawdowns here. You can see one here, another here. Apart from that, you don't see major drawdowns. Even those are kind of shallow and took some part of the profits for some time and then regaining those profits and going higher again. This is about this strategy. Let's move on to the next strategy. The second strategy is Nifty on a 7-minute time frame. This is how it looks on the chart when this indicator is added in TradingView. This strategy gives more time to the market to go in favor of your trade and focuses mainly on capturing most of the big moves. This strategy aligns itself strongly with the famous quote by Warren Buffett, "The market is a device from transferring money from the impatient to the patient. So again, we look at the equity curve, and this is how it looks like. And you can see again, it's a very smooth equity curve, which is with very few drawdowns. If you just eyeball the equity curve, you can see one here and the other one here. Apart from that, overall it's been going up and increasing your capital every year. Profit factor of 2.1, which is wonderful, and it's got a total number of trades 202 in 5 years. When comparing with the other strategies, we'll get to know how much the annual returns are and how many trades we take every year as well. So let's get into all those things when we are comparing the strategies. Okay, it's time to move on to the next strategy. The next strategy is reliance on 60-minute time frame, and you can see this indicator on the chart. It's been applied. This strategy is based on lower time frame compared with other strategies involving stocks. This strategy tries to identify momentums and ride them. It exits when it sees loss of momentum. So you can see here the profit factor. It's got a very good profit factor of 2.46, which is massive, and it's got a very smooth equity curve. It stagnated for some time, as you can see, but again started moving up. It's got a total of 203 trades in 5 years, and you don't have to remember all these numbers yet, because when we are comparing that with other strategies, you will be able to easily relate to all these things in a much better way. Okay, so now let's move on to the next strategy here. It's the Apollo Hospitals on a 90-minute time frame, and this is how it looks on the TradingView chart when you apply it. This strategy tries to look at high quality trades and hence a great profit factor. It finds trades only on a slightly higher time frame, and therefore it's got limited number of trades. Here the equity curve is smooth and the curve is going up with a healthy profit factor of 2.25, and it's got a total of 159 trades in 5 years with the profitable trades of 47%. As I said, don't stress yourself too much on any of the numbers. Mainly look at the equity curve and the profit factor. If the profit factor is good, the equity curve will look like this, which is quite smooth, and it will be going up and up and up. So the next strategy is Tata Power, and it is on a 100-minute time frame. So these are all like different time frames that's been tested and specific to specific stock with a specific time frame. This strategy takes a bit of risk to ride on the big moves and doesn't mind in making minor losses or minor gains from smaller moves. So as you can see from the equity curve, it's kind of having a step ladder kind of equity curve. It stagnated for some time here, and then from July 2023 onwards it gained the momentum and moving really well from that point onwards. It's got a healthy profit factor of again over 2, which is 2.14, and it has got 250 trades in 5 years with a profitable trades of 48.4%. Let's move on to the next strategy. It's Maruti on 150-minute time frame, and this is how it looks on the chart. This strategy is highly picky and wants only high quality trades, and that too the price should move in its favor within a reasonable time. Else it gets you out of the trade quickly, protecting your gains or by cutting your losses early. Hence this strategy boasts of high profit factor of 2.7 with 94 trades in 5 years and 50% profitable trades. Let's move on to the next strategy. It's Indigo on a 150-minute time frame again. This is how it looks on the chart, this indicator. This strategy also belongs to the league of high profit factor, wherein a low potential trades are ignored and focuses only on trading opportunities with high quality. This strategy boasts of a profit factor of 3.3 with 90 trades in 5 years and 56.6% profitable trades. It's time to move on to the next strategy. SRF on 150-minute time frame again, and this is how it looks on the chart once you apply it. Again, with great profit factor and wonderful risk reward ratio, this strategy is not about number of trades but maximizing returns with less number of trades, that too consistently. It's got a smooth uptrending equity curve with 91 trades in 5 years and 48% profitable trades. Let's move on to the next strategy. DLF on 195-minute time frame, and this is how it looks on the chart once you apply it. This strategy uses higher time frame to identify the momentum in the stock by looking at and analyzing previous momentums and overall structure, and gives you high quality trades. Therefore, this strategy enjoys a massive profit factor of 3.6, which is the highest of all the strategies explained in this video. This strategy aligns itself nicely with the famous quote by George Soros. It's not whether you are right or wrong that's important. It's how much money you make when you're right and how much money you lose when you're wrong. Again, it's got a smooth uptrending equity curve with just 69 trades in 5 years and nearly 60% profitable trades. Let's move on to the next strategy. Astral on 90-minute time frame, and this is how it looks in trading view. This strategy takes less risk but believes in delivering great returns using high quality trade setups. Hence, it gives just around 9 trades per year and yet delivers nearly 55% of the capital invested in this strategy. It's got a smooth equity curve going up with 45 trades in 5 years and 55% profitable trades with profit factor of massive 2.9. Let's move on to the next one. Asian Paints on 90-minute time frame. Again, belongs to the same league as Astral by delivering great returns with less number of trades. It aligns with the famous quote by Bill Lipschutz. If most traders would learn to sit on their hands 50% of the time, they would make a lot more money. It's got a smooth uptrending equity curve with just 47 trades in 5 years and nearly 49% profitable trades with a profit factor of 2.7. Now move on to our final strategy, the 12th strategy. It's Havells on 90-minute time frame, and this is how it looks in trading view when you apply this indicator. Astral, Asian Paints and Havells are of the same family by delivering exceptional returns by picking only high quality trade opportunities. It's got a smooth equity curve going up and just 42 trades in 5 years and nearly 60% profitable trades with a profit factor of massive 2.9. So this finishes the explanation on all the 12 strategies in Ultimate Trading Strategies. We move on to the next section. So in this section we are going to compare all the 12 strategies we just discussed. And as you can see here, this is a table that's going to compare everything here. I'm just going to explain to you the headings first so that you can easily understand the next few analyses that we are going to discuss. The first is the symbol, that is the strategy that we are going to discuss, and then the backtest period. It's almost pretty much close to all 5 years. Sometimes it could be like 1 month more or 1 month less, that's all, but everything is around 5 years. And then we say what's the lot size and what's the margin required in futures, and what's the profits it made, and average returns per year, and what's the winning trades out of the total trades, and how many trades do we expect to trade every year, and as you know, the profit factor, which is very important for us. And we also look at a win-loss ratio as well. And in the last column, we are going to discuss about winning percentage and what's the annual returns these strategies gave. Even though this has been tested for 5 years, we are going to see what's the annual returns so that we get a fair idea of what we can expect from these strategies. So the first one is, let's move on to Bank Nifty 90-minute strategy. Again, backtest period 5 years. The lot size currently it has 35. It keeps changing. Sometimes it will be 30, sometimes it will be 35. So anyway, as and when the lot size changes, you just trade with the whatever the lot size that's currently been trading. Okay. The approximate margin required for this is 275,000. So I've actually slightly put a higher number itself so that to as a buffer, you can say. So maybe it's around 268 or 270, something like that, and it depends on the broker. Maybe it's around 275 I've put. So the profits in 5 years actually is around 946,000 rupees. Average returns per year, so it's for 5 years. So if you do it for 1 year, we get around 186,000 rupees. Number of winning trades is 106 out of 220. So we can expect around 43 trades per year. Okay, it's just 43 trades per year. You don't have to trade frequently. Okay, it's just 43, and with that number itself, it can give you massive returns. It's got a fantastic profit factor of 2.07 and win-loss ratio of 2.2. So win percentage is around 48%. So annual returns, that is 67.6%. What we're talking about is for the amount you invested. Let's say the margin required is 275,000 rupees, and the returns per year it gave is 186,000. So that is 67% returns on your investment. So going forward in this list, I want you to focus mainly on the final 4 columns, you can say. Okay, so one is how many trades you can expect per year, what is the profit factor, and what's the win-loss ratio, and what's the annual returns. Okay, so moving on to the next one is Nifty 7-minute time frame. Again, it's for 5 years, around 5 years. The lot size is 75. Margin required is 225,000 currently. So it gave a profits of around 863,000. So on an average, returns per year is around 220,000. So your investment is 225,000, and it gives you annual returns of 220,000. And per year, you just have to trade 52 trades, around 52 trades. That's the number of trades you can expect in this strategy, with a good massive profit factor of 2.09 and win-loss ratio of 2.42. The success ratio of this strategy is just 46.3%, but it still delivers great results. As you can expect, it's because of this profit factor. Okay, and it gives you 98% annual returns. For the invested amount of 225,000 for this strategy, you will be getting an annual returns of 220,000. This is the potential this strategy has, and it's been giving for the past 5 years. Okay, so it can vary bit more, bit less, depending on the market condition. But this is a fantastic figures for this strategy. And moving on to the next one, it's Reliance 60 minutes. Again, 5 years, lot size 500. Margin currently it requires 150,000, which is 1.5 lakhs. It gave a returns of 563,000 in 5 years. Turns out to be 114,000 per year, around 114,000 per year, 1.14 lakhs. It just triggers 41 times during a year. Only 41 trades per year, around 41 points. 41 trades. The profit factor of 2.46. It's got the winning percentage of just under 50%, which is 48.8%, and it is giving you a annual returns of 76%. The amount you're investing for this strategy is 150,000 for the margin required, and you're getting a returns of 114,000 per year. Apollo Hospitals, 90 minutes. Again, 5 years back tested. 125 is the lot size, 175,000 is the margin required. It gave approximate profits of 668,000 in 5 years, so which then moves on to like 135,000, which comes around to 135,000 per year. Around 32 trades per year, only 32, with a massive profit factor of 2.25 and success rate of just 47.1, with annual returns of 77% on your capital investment, which is for 175,000 investment in this strategy, you're getting 135,000. That is what it's been delivering for the past 5 years. Okay, so let's move on to the next one. Tata Power, 100 minutes. 5 years back tested. 1,450 is the lot size at the moment. 125,000 is the margin requirement. Per year, it gives a returns of 128,000, which turns out to be 102%. That is more than the capital invested. And you have to appreciate that why this is happening is because of the huge profit factor that it boasts of. It's just taking only 30 trades per year, and it's giving you 100%, more than 100% returns. So if you have around 3 lakhs capital, you can do either take 2 lots of these, which has got 125,000 some of the things, or you can club with 2 strategies. That's the kind of thing. And now Maruti, this is 150-minute time frame. 125,000 is the margin requirement. It gives annual returns of 74,000, and that turns out to be the percentage terms. It's around 59%. Okay. Indigo, 150 minutes again. See, Maruti, Indigo, these all focus on high quality trades, and that's the reason you're seeing very less number of trades per year, but still a massive returns on your investment. 175,000 is the capital requirement, margin requirement, and it gave 110,000 per year annual returns, which amounts to 62.5% of your capital. So moving on to next one quickly. SRF, these 3 are under the same category, 150 minutes, and that's why it has a similar number of trades. This one also got 18 trades, that's all, per year. Maruti 19 trades, Indigo 18 trades, SRF 18 trades. So SRF 125,000 margin requirement. These are all very low margin requirements. Okay, so if they change the lot size, obviously it changes, but at the moment it is 125,000. It gave a annual returns of 81,000, which turns out to be 65% of your capital. Next is DLF, again 825 lot size, 155,000 is the margin requirement, 439,000 is the overall profits in 5 years. That turns out to be 89,000 per year, and it's got only 14 trades. Can you believe it? It's only 14 trades per year, and it's giving you 57% annualized returns on your investment. You invest 155,000 and then you get 89,000 in return per year. This is what it's been doing for the past 5 years. It's got a fantastic one with just only 14 trades per year. Astral, 90 minutes. 120,000 is the capital requirement. 66,000 is the annualized return, which amounts to 55% of your capital. How is this annualized return calculated? It's based on how much you have invested and what's the gains, and that's converted into percentage. That's all. So 66,000 you gained from 120,000, that roughly amounts to 55%, and with only 9 trades. See here, only 9 trades per year. So with a massive profit factor of 2.94. As I said, it's all about the profit factor. As the profit factor increases, the returns also increase. You get less number of trades. That's a trade-off, you can say. Next is Asian Paints, 250 current lot size, only 110,000 is the margin requirement, but it gives you annualized return of 53,000 per year, which amounts to 48% on your capital investment of 110,000. Only 9 trades per year, not more than that. Maybe 1 or 2 plus or minus, but around 9 trades you can say, with a profit factor of 2.74. And finally, it's the Havells 90 minutes. All these belongs to the same category, Astral, Asian Paints and Havells on 90-minute time frame. Current lot size is 500. 145,000 is the margin requirement. 55,500 is the annualized return on this one, which amounts to 38.2%. It's got only 9 trades per year. So you have different variety of trades that you can look into, pick from. And if you have a large investment, let's say if you have like 15 lakh investment for this trading, then obviously you can go for all these strategies that automatically diversifies your risk. If you have around 3 lakhs, you can go with one strategy with 2 lots, maybe doubling the lots, or you can go with 2 strategies. So you can do quite a lot of things here. They're all good as a standalone, as well as if you have let's say, as I said, if you have 15 lakhs, it's not a wise thing to invest in only one strategy and make it sell, say, Reliance, which is 150,000, and you cannot really say I will take 10 lots of Reliance. So that's like putting everything in one basket, which is not a very good idea when it comes to financial matters. So in that, if you have like 15-16 lakhs, then obviously you can go for all these strategies, 12 strategies, and it will be automatically diversified. Okay, of course the overall margin requirement, if you go for all the 12, means it's around 18-19 lakhs, but assuming that not all of the strategies tells you to keep open positions at the same time, you might actually do with the 14-15 lakhs, that kind of a thing. So this is about the comparison. The main thing is the profit factor. As you can see here, the gains are a bit high when the trades are also high, like in Bank Nifty, Reliance. It's got a bit higher number of trades per year compared with Havells, Asian Paints, Astral. So it basically useful for many types of traders. We get different kinds of traders, and it accommodates all those things. And of course, with the different strategies in mind, all these strategies have been developed. Now let's move on to the next section. I know this video is getting bigger, but it's important to have comprehensive information so that we can make a well-informed decision when it comes to trading. So we are going to revisit, as we said earlier, that we are going to revisit the common problems and mistakes of traders, and we are going to see if these mistakes or problems have been addressed and eliminated in our trading strategies. For example, the first one, emotions involved in trading. See, if you are using this strategy, there is no emotions involved whatsoever. All you have to do is take the trade when it says, and then that's it. If it says buy, and then you wait till it says sell. You can set an alert in TradingView and keep on doing with your other work. If you're not a full-time trader, you can go to your work, do whatever you want, but just keep an alert, and then you can actually execute the trade on your phone itself. And as you see here, it's not like too many trades that's coming up. It's just from time to time you just have to be aware of that. That's it during the market hours, and you can carry on with the other parts of your life work. Emotions, zero emotions. You just have to take the trades when it says. That has been completely taken out of the equation, and that should give you many traders a big relief. Okay. Now, difficult to maintain discipline in trading. See, this way you can actually automate these trades. You know that using some of the brokers from TradingView, you can actually automate. You can just set the code there, and then as soon as the strategy is triggered, it sends a signal to the broker and the trades are executed. I will make a separate video on that as well. So you don't have to do anything. You can just, this will be like a passive income for you with the amount you have that could be invested. Now, no clear strategy. Of course, here this has been completely taken out. We have a very clear-cut strategy that's going to be automated completely, and it's going to tell you what to do, when to do. That's all. So there is a clear-cut strategy that has been completely addressed, and that issue has been satisfactorily eliminated. Lack of robust risk management. See, again, this one, it tells you like it it tells you how many trades you'll be taking in a year, what can you expect, and what's the annual returns that you can expect, what's the amount you are investing. All these things have been given to you. All you have to do is what's the amount you have and how many strategies I can invest in. That's all you have to do. And you can start with less, and as you start making returns from these strategies, you can increase the number of strategies as well if you're starting small. If you're starting big, already it's all been accommodated here. You just have to have that much required margin, and the strategy takes care of itself. So you got a very robust risk management in place here, which is very important for any type of trading. Now, the other problem traders were facing was lack of set frequency for trading. Here you already know how many trades you can expect per month, per year. All those things you can easily see, right? So that's pretty clear there, and that's been eliminated as well, that issue. Lack of research and knowledge. In this, everything has been bundled into this strategy. It took a lot of time for me to have been trading these strategies for a pretty long time. It's not a new one, but it was very difficult to put all those things into coding and develop it that reflects how I trade. So that's why it took a lot of time. So all the research and knowledge of plenty of years background in this, it's been put into this, and this strategy is taking care of any lackings that you may have in research and knowledge. So you don't have to do anything, you just have to follow the system. Okay. Over dependency on indicators, again, this doesn't comes into picture at all. Everything has been bundled in this strategy. It takes care of everything, and it tells you when to trade and how to trade. Okay, these are the issues that's been taken care of. Let's move on to the next section. So how can you make these strategies yours and start implementing with your trading? There'll be 2 links given in the description box. You can take advantage of the discounted launch price to buy these strategies. The validity period is 1 year for all the strategies. If you make the payment using the first link with the phone pay, then you will get 15 days additional validity period on top of 1 year. So the phone pay is just simple form, Google form that looks like this. You just have to enter your name and TradingView username, which is very important, your mobile number, your email ID, and what all the strategies you want to opt for. You select all those, and then you can make the payment by scanning the QR code given here. And once you have received that, your form with the screenshot of the payment you have made, that indicator or the strategy will be added on to your TradingView account. Your username that you have provided will be given access to that strategy, and you can see those strategies in invite only section when you click on indicators. The second link that you can use other modes of payment as well, and it's on the Razorpay platform. You will get 1 year validity period. You can go to my Razorpay store, which looks like this, and you can add whatever the strategies you would like to buy, and it's all 1 year validity. After successful payment, your TradingView ID that you have provided will be given access to those strategies that you have opted for, and you can see that in TradingView in the invite only section when you click on indicators tab. One more important thing is make sure you have sufficient access in TradingView, and if you want to add more strategies into the account, you might need a premium account for that one, because the free version gives you probably just 2 alerts or 2 strategies or 2 indicators, so there is a limitation on that. So make sure you have sufficient access level in TradingView before purchasing these strategies. And if you have any queries at all, you can email me at simplechartsanalysis@gmail.com. And finally, I would like to conclude this video by saying the important quote from Michael Cowell: never ever argue with your trading system. So just do what it says and you will start reaping rewards. Thank you.